Joining me now is WaFd President and CEO Brent Beardall. Brent, welcome. I understand that based on your results, WaFd is pretty strong, but what gives you confidence across all of the regional banks?
You know, it's one of those things that we see something happening and then we, extrapolate it everywhere else. Banks are in the business of taking risk. We plan for credit losses. And when one or two banks have an issue, and issues are going to happen from time to time, we're in the business of taking deposits and lending those out as loans, and not all those are going to pay us back. And we have reserves against that. And I actually, if you don't mind, I'd like to go back to what you and Leslie were just talking about.
Sure, yeah, please do.
Loans to non-depository financial institutions. And I don't want to speak to anyone's specific loan or any of the specific releases, but there's a question, and investors and banks should ask, what is the exposure to those non-depository financial institutions? At WaFd, we've stayed away from it because our thinking is, if we're not comfortable making the loan ourselves, why would we make a loan to someone else who in turn is going to make a loan to someone that we're not comfortable doing it?
Right.
So it's a way of diluting credit standards from our perspective. The best way to control your credit is to make the loans yourselves and not lend money to someone else who's making loans.
And that's what I'm trying to press on here is how confident are you that you're not an anomaly in that level of care that you say you're taking at WaFd, and that the market isn't right to be concerned that as so many investors have been chasing yield down the line, that standards at some places haven't loosened?
Well, you only know what you know, right? And then the surprises are what gets everybody. So I can't speak to overall portfolios, but what I'm seeing in the marketplace, people have been very conservative overall. And even when you look at the non-depository financial institution, the loans to that segment, it's a small segment of almost anyone's portfolio. And look at the non-performing assets. Non-performing assets are incredibly low at this point, as well as look at net charge-offs. Take, for example, WaFd, and I know this isn't your question, but at WaFd, that we just finished our fiscal year, we had net charge-offs of only 6 basis points last year. Mm-hmm. And we have a reserve of 104 basis points. So we could go 17 years before we would use up our allowance for loan losses. And that's before we touch capital. So, and most banks are just like us.
Okay.
Loan losses just aren't materializing.
At the same time, though, non-performing assets for you did increase in 2025, right? Delinquencies rose. You're saying off of a low base, but there are some pressures in the industry that could be tightening around some that are less well positioned than you know?
Well, very much so, and even for us, right? The reality is our borrowers, some borrowers are experiencing stress. What happens when your floating rate interest rate goes up 500 basis points? That's going to be a pinch on cash flow. And some borrowers are going to experience stress, but that doesn't talk about what you have in terms of collateral behind that loan. So ultimately what matters is what your net charge-offs are. And the other thing that I'd like to call out, and I have the utmost respect for Jamie Dimon and JP Morgan Chase, but he has been so frequent in terms of calling the next recession, and his comment about cockroaches out there, and maybe he's right this time. But we have been 15 years since we've seen a recession, and at the first time when we see some weakness, to then all of a sudden, in my opinion, overreact and sell all the regional banks, it's just a buying opportunity for those that do their homework.
Fair. I view that as a fair statement for sure. But let me ask finally about commercial real estate. I believe you sold a large CRE portfolio, decided to make that decision. What does that say? A little bit of a discount, too, there that you're selling it, I think. Well, what does that say about WaFd's assessment of what's happening in CRE, and what should investors know about other banks that might be more exposed, continue to be exposed to commercial real estate?
Yeah, so just one correction there, John. That sale was a year ago, and we sold about $2.8 billion, and we actually sold it at our book value. So we sold it for no loss.
Got it.
And really what, to me, it tells investors is the amount of liquidity that's in the system and the desire for these assets, and these assets are indeed liquid, which is a very good story for investors.